At Bursa Malaysia, we give you access to all kinds of doors, so you can profit from all kinds of opportunities. You'll find doors that lead to businesses as old as the land itself, doors that open to the future and the wealth of opportunities that await. Some doors open multiple pathways for you and for everyone else. And they are supported by the doors that unlock the energy that powers everyday life. There are doors to solutions that are good for people and the planet. And doors that hold new ideas, new ways of connecting data that can change everything we think we know. There are even doors that empower everyone through values that are fair, just, and transparent. While others bring the world to us to shape our brightest minds, you can open doors that take you across the world with just a click, or give you access to the economic roots of the ASEAN. We connect businesses and investors of all sizes. At Bursa Malaysia, businesses raise funds and gain visibility, while investors seize opportunities to grow their wealth. Trust and rely on us. Open the doors, step in, and create the impact you seek. Bursa Malaysia, creating opportunities, growing value.
Bismillahirrahmanirrahim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. Assalamualaikum warahmatullahi wabarakatuh, and a good day to our viewers. Welcome everyone. We are delighted that you could join our first Shariah Investing Dialogue series, or SID, with public listed companies in 2021. My name is Nadira and I will be your host for this evening. Before we start, there are a few pointers I would like to share with everyone. The presentation is only one session and the participants' microphone will be muted during the dialogue session, and there will be a Q&A session after the dialogue session. So you may type in all your questions in our chat box and we will address them during the Q&A session. Today, we are interested to discuss on the opportunities for public listed companies in Shariah-compliant landscape. We are blessed with the presence of industry experts, so make sure you fully utilize today's opportunity to interact with them. First, let us welcome Encik Azhar Muhammad Zabidi, Director of Securities Market of Bursa Malaysia, for his opening remarks.
Thank you, Nadira. Bismillahirrahmanirrahim. Yang berbahagia Profesor Dr. Ashraf Muhammad Hashim, Chairman of the Shariah Committee Bursa Malaysia Berhad, yang berusaha Saudara Nur Aizat Sheikh Ahmad, General Manager, Islamic Capital Market Development of the Securities Commission Malaysia, distinguished representatives from public listed companies, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh, and a very good afternoon. First and foremost, I would like to extend a very warm welcome to all panel speakers, representatives from public listed companies, and all participants. It gives me great pleasure to have this opportunity to address you at today's Shariah Investing Dialogue 2021. It's rather unfortunate that we are unable to host you physically. Nevertheless, despite the current global health pandemic, continuity is essential. Bursa Malaysia had in 2015 and 2016 organized similar dialogue sessions with PLCs. This year, Bursa Malaysia wishes to revive the above dialogue session to increase the awareness on the value of Shariah-compliant status among PLCs, to further increase the number of Shariah-compliant PLCs under the Shariah Investing Dialogue with PLCs series, or SID with PLCs, 2021. Themed as the opportunities for public listed companies in the Shariah-compliant landscape, this dialogue session provides a platform for PLCs to increase the awareness and improve the understanding on Shariah compliance and its value proposition and benefits, as well as to closely engage with both Bursa Malaysia and the Securities Commission to address your concerns and obtain clarification with regard to Shariah compliant status. Now, I would like to cover 3 areas in my opening address today. Firstly, an overview of the Shariah compliant equities market. Secondly, what exactly is the value proposition? And finally, the opportunities for PLCs with Shariah compliant status. I trust these 3 areas will provide for an introduction to this important event as I attempt to set the stage for this dialogue for this afternoon. Let's start with the first slide, slide 3. This is an overview of the Shariah-compliant equities market. Ladies and gentlemen, as at February of 2021, the overall size of Malaysia's capital market was 3.4 trillion ringgit, of which the Islamic capital market accounted for 2.2 trillion, or 65% of the overall size of the market. The equities market itself makes up the largest slice of the capital market pie with 1.38 trillion in value, out of which 69%, or 1.25 trillion ringgit value, was the size of the Shariah equities market. Moving forward to the next slide. At Bursa Malaysia, there are 4 main markets. We have the securities market, the derivatives market, the Islamic market, and the offshore market, which is essentially the Labuan International Financial Exchange, or LFX, that offers the listing of both sukuks as well as conventional bonds. In the Islamic market, we offer a diverse range of Shariah-compliant products and services, which include a sizable number of Shariah-compliant securities, and the Bursa Malaysia I platform that offers principal-based investors a unique proposition for Shariah-compliant investing, and the commodity Murabahah platform, Bursa Suq Al-Sila, that is able to facilitate financial institutions and cooperatives to offer liquidity management. Our Shariah-compliant investing platform, Bursa Malaysia I, is a fully integrated Islamic securities exchange platform, offering a comprehensive range of exchange-traded facilities that include listing, trading, clearing, settlement and depository services, and provides investors with a comprehensive end-to-end Shariah investing experience. The platform has also positioned Bursa Malaysia as a global marketplace for Shariah listing and investments, with the ability to meet the diversified needs of both institutional and retail investors. Moving on to the next slide. As of February of 2021, a total of 976 securities are listed and traded on the exchange, of which 77% were Shariah compliant. And in terms of listed entities or PLCs, 738 out of the 938 listed companies, or 79%, are Shariah compliant. Other listed Shariah compliant products such as Islamic exchange traded funds or ETFs and Islamic real estate investment trusts or REITs are also viable alternatives catered to investors with differing risk appetites, and we expect much more of these products to gain popularity and come to market. Now, given the immense growth in terms of the demand for Shariah compliant securities, in tandem, we have seen similar growth in the number of and the types of assets which meet Shariah compliant standards. Moving on to the next slide. Now, as a result of the huge number of Shariah compliant securities listed and traded on the exchange, the Shariah market capitalization stood at 1.25 trillion ringgit in terms of value. That's 69% of total market capitalization of 1.8 trillion ringgit. Now, year to date, as at February, the average daily trading value, or ADV, the contribution of Shariah-compliant securities traded on the exchange was 4.1 billion ringgit, or 80% of overall ADV of 5.1 billion. And as you can see from the next slide, in terms of index performance and the growth over the last 10 years, we also observed that Shariah indices has consistently outperformed their conventional counterparts over the last 10 years. that's a whole decade, indicating that Sharia-compliant investments are an attractive source of value for investors. Between January of 2010 and February of this year, the FTSE Bursa Malaysia Hijrah Sharia Index, comprising 30 of the largest Sharia-compliant companies, has consistently outperformed the FTSE Bursa Malaysia KLCI, growing by over 30%. As you can see, the only index which outperformed the Bursa Malaysia Hijrah Sharia Index was the FTSE Small Cap Sharia Index, which again looks at a collection of Sharia yet small cap stocks that have gained considerable popularity. Moving on to the next slide. While Bursa Malaysia outperformed most regional exchanges in 2020, despite the impact of the global pandemic, interestingly, the top 10 gainers in 2020 were all Sharia-compliant listed companies, as compared to the year before, when only 7 out of the top 10 performers were Sharia-compliant. And moving on to the next section, and slide 10, what is really the value proposition? Well, ladies and gentlemen, for IPO candidates looking to be recognized as Sharia-compliant companies, this is determined by the Sharia Advisory Council, or SAC, of the Securities Commission. Sharia compliance review is undertaken for securities listed on the exchange and during the pre-IPO period. For pre-IPO companies, the screening for Sharia compliance status is made upon application voluntarily. There are 2 ways, either during the IPO submission itself or after getting the SC's approval. In terms of fees, the processing fees is a mere 10,000 ringgit plus 5% of the market value of the company itself, which is capped at 50,000. The flow of the listing process for main and ACE markets are shown on the screen and is pretty straightforward. Let's go to slide 11. This slide shows the comparison in terms of this oversubscription, or rather subscription rate, between Sharia-compliant IPOs and non-Sharia-compliant IPOs. And this is a very interesting point, because between 2016 and 2020, 51 out of 60 IPOs, or 85%, were classified as Sharia compliant. 10 out of the 60, or 17% of the IPOs, were oversubscribed for more than 40 times, of which all 10 were Sharia compliant. For those of you who are contemplating an IPO, for example, 40 times oversubscription is no mean feat. The key takeaway here is that being Sharia compliant, a Sharia compliant stock, gives you the ability to cast a wider net when you go out to market. Just to add, the level of oversubscription also provides the market with an indication as to how well your company is received by the investor community, and hence how well your company will perform at listing. And this brings us to slide number 12. Now, this graph shows that the IPO's first day price performance upon listing. Out of the 60 IPOs we mentioned, 14 IPOs, which were all Sharia compliant, closed with over 30% increase in the offer price. This shows the higher demand for Sharia compliant IPOs as compared to conventional IPOs. The point to note here is that the Malaysian Islamic Capital Market has much more to offer. And these are just some of the indications of the value that Sharia compliance for both listed issuers and investors at large. And remember, fund managers who are mandated with Sharia or Islamic funds are by mandate not able to pursue investing in non-Sharia investments. Now, let's have a look at the opportunities for PLCs and Sharia compliant status, and looking at slide 14. The growing demand for Sharia compliant investment is supported by increasing range of Islamic financial asset classes, resulting from investors who are keen to invest in Sharia compliant manner. The Islamic investment opportunity is accessible to institutional and non-Muslim investors who wish to diversify their investment through Sharia compliant instruments. Sharia compliant investing is within the ambit of sustainable and responsible investing, or in short, SRI, which brings added advantages to the economy and the society as a whole. They include a reduction in uncertainty and leverage in the business community, maintain stability by removing businesses based on speculative ends, and promote sustainable businesses and investment activities that entail positive results with stable prospects and the welfare of societies. Now, I just wanted to add one or two things which I wanted to highlight, which is very, very important before I go on. On this particular area, for example, this is very, very pertinent today because given the rise in the demand for investments, or rather for people to invest in the sustainable criteria, what many have not realized is that Islamic finance and sustainable finance have a lot in common, in that its key investment criteria are very similar, albeit not entirely the same. But more often than not, Islamic principles and sustainable principles share a largely common universe of requirements. So as such, in another way of looking at it, you are again able to cast a wider net when you meet the requirements of these two large and ever-growing set of investors. Now, in terms of equity-based investment, Sharia-compliant products and services promote good socio-economic values, which facilitate responsible investments that generate social and environmental benefits alongside financial returns. This creates a win-win situation for investors, investee companies, and society at large. As a result, choosing investment activities anchored on Sharia principles, characterized by long-term sustainable and responsible perspectives, builds greater stability and ensures the socio-economic well-being of our nation. Now, the rapid rise of interest in responsible investing has led to the convergence of SRI and Sharia-compliant investing. To support the growing demand for sustainability, we will also continue to strengthen and broaden our Sharia-compliant offerings with the aim of increasing investor participation and allow to fulfill their social responsibility of contributing wealth towards socio-economic development and growth. What makes the Islamic capital market different from the conventional capital market is the ethical dimension, which focuses on the long-term sustainability of society and its principles of risk sharing, as well as avoidance of excessive leverage and speculation. Capital markets, through equity and asset-based finance, can play a critical role in facilitating long-term investment and reducing poverty by providing the opportunities for the poor to build assets. The risk-sharing and asset-based financing nature of Islamic finance and its potential contribution to the growth and inclusive prosperity have considerable merit, particularly in light of the mounting evidence of the adverse effects of debt and leverage on the economy. A well-functioning capital market not only improves the capital allocation in an economy, but also enhances productive growth. Islamic capital markets can, therefore, make a significant contribution to achieving economic development and enhancing shared prosperity using the principles of risk sharing and equity participation. Just going on to my last few slides. As I mentioned earlier, Islamic investments have much in common with socially responsible investments, including those with an ESG mandate. There are undoubtedly benefits to be gained by integrating the value-based orientation of Sharia investing with a greater focus on environmental and social impact. Over the years, value-based and ESG investing has provided comparable returns, and in some cases, better financial returns than conventional investments. More recently, for all the downside consequences that the COVID-19 pandemic has brought to us, most ESG investments have outperformed their non-sustainable peers. The FTSE Bursa, we call it the FTSE for Good Index, measures the performance of Malaysia's PLCs demonstrating strong ESG practices. And as part of our support towards ethical finance, it is worth to note that more than 2/3 of the 75 FTSE for Good Index constituents are both ESG and Sharia compliant. Now, before I leave the final slide, slide 16, several research studies have already shown that companies that integrate ESG in their businesses are not just profitable, but also ensures its financial sustainability over the long term. Studies indicate that the implementation of ethical considerations in Sharia and ESG indices does not negatively impact performance. Value-based investing has provided comparable returns, and in some cases, better financial returns than conventional. It also promotes sustainable businesses and investment activities that entail positive results with stable prospects and welfare societies. Hence, the close alignment in the underlying principles of Islamic finance with SRI places Islamic finance in a very unique position and well suited to support social objectives. Ladies and gentlemen, Islamic finance is no longer a domain exclusively for Muslims. It has grown to be a $2 trillion industry, and Malaysia is one of the world's largest Islamic marketplaces, strives towards providing regional and global markets with our comprehensive and sophisticated Shariah-compliant financial instruments, and continues to receive strong interest as an avenue for fundraising and investment. Bursa Malaysia serves as the global marketplace in delivering a unique proposition to further build our strength and competition, or rather competitive edge, and as a catalyst for new development and innovation in the Islamic capital market. I would like to remind everyone that Malaysia's capital market has so much to offer, for we have a resilient financial system and an innovative ecosystem that's open to the world. And on that note, I wish everyone a very productive and meaningful session. Thank you, and Assalamu alaikum.
Waalaikumsalam. Thank you, Encik Azhar Muhammad Zabidi. We will now go over to our dialogue session to discuss on the opportunities for public listed companies in Shariah-compliant landscape. We will be joined by Encik Muhammad Arham Munir American, Manager of Shariah and Governance of Bursa Malaysia, as the moderator, alongside two other panelists, Professor Dr. Ashraf Mat Hashim, the Chairman of Shariah Committee Bursa Malaysia, and Encik Norizat Sheikh Ahmad, General Manager of Islamic Capital Market Development, Securities Commission Malaysia. So I will just read their brief profile. Professor Dr. Ashraf bin Mat Hashim is the Chief Executive Officer of ISRA Consultancy. He is also a Senior Research at International Sharia Research Academy for Islamic Finance and a Professor at International Center of Education in Islamic Finance, INSIF. Dr. Ashraf currently sits on the Central Bank of Malaysia's Sharia Advisory Council as Deputy Chairman and member of the Securities Commission of Malaysia's Sharia Advisory Council. He is also a member of Sharia Committee for International Islamic Liquidity Management Corporation, IILM. Next is Mr. Norizat, who is a member of the Malaysian Institute of Accountants and holds a Master in INSIF Malaysia. Under the Islamic Capital Market Development, Mr. Norizat is primarily involved in the strategic, developmental and operational aspects of the Islamic capital market in Malaysia. Prior to that, he was attached to the corporate finance and investment, where he was involved in various aspects of fundraising proposals, such as initial public offering proposals, mergers and acquisition, as well as restructuring schemes. I will now handle the session over to Encik Arham.
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and a very good afternoon to ladies and gentlemen, all attendees of the Shariah Investing Dialogue today. Thank you, Nadira, for the introduction, and thank you also to Encik Azhar, the Director of Securities Market, Bursa Malaysia, for the welcoming remarks that had set the tone of our discussion today. So basically, Islamic finance is a very crucial enabler for the financial inclusion agenda. So this is what being stated if we see the World Bank reports. And in the past, Islamic finance is very much focused in allowing or in enhancing the participation of Muslim investors or Muslim communities into the financial industry, financial market. So today, if we see post-pandemic, we see Islamic finance once again being the forefront in bridging the gaps through its redistributive mechanisms such as zakat and wakaf, and to promote social finance. So in pushing the Islamic finance agenda in Malaysia, we have our regulators, Bank Negara Malaysia and also Securities Commission Malaysia, with its many policies and initiatives. And one of which will be the subject matter to be discussed today. which is the list of Sharia-compliant securities and the Sharia screening methodologies. So today, we are very honored to have two distinguished panels. First of all, we have Encik Noraizat Sheikh Ahmad, the General Manager for the Islamic Capital Market Development Securities Commission Malaysia. And we are also very happy to have with us Prof. Dr. Ashraf Mat Hashim. He's the chairman for the Shariah Committee of Bursa Malaysia, and also sits as a member in the Shariah Advisory Council of Securities Commission Malaysia. So it is a pleasure to have both of the panels with us to talk about this topic. And the topic itself is opportunities for PLC in a Shariah-compliant landscape. So for all the attendees, basically this session will have two rounds. So the first round, we will have one question each for each panel. And then for the second round, we will open the floor for questions from all the participants. So Encik Aizat, so let me start with our first panel, Encik Aizat. So as the regulator, can you share with us the behind the scenes stories of the Sharia screening methodology and processes that had been adopted for more than 20 years since 1997 by the SC? And maybe you can share with us whether do you foresee any revised methodology in the near future? So please, Encik Noraizat.
Thank you very much, Raham. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and very good afternoon to all. It is indeed a pleasure to actually be here together with our respected Shariah Advisory Council member, Professor Dr. Ashraf as well. Thank you to Bursa for the invitation to attend this Shariah Investing Dialogue. I think like Encik Azhar mentioned, I think the last one we had was some time ago. So it's good to actually have the session again as a refresher, because there are many new companies being listed on the exchange as well over the years. So it's good for the newer companies to actually be familiarized with this Sharia screening methodology. As an introduction, I will share my presentation slide. Are you able to see? Okay. Shariah Compliant Review was the first developmental initiative undertaken by the SC to actually develop the Islamic Capital Market segment. It is undertaken on all companies listed on the exchange, initially on the main market, then on the ACE market, and now we also undertake Shariah screening on the lead market as well. There is no application required. There is no fees payable for the Shariah Compliance Review to be undertaken, except for the pre-IPO application, which is voluntary. I think this is done for the purpose of the developmental initiative on the part of the SC as well, to develop the Islamic Capital Market segment. Companies are only reviewed once a year based on the latest available audited financial statement. However, the list is issued twice a year in May and November to cater for companies with different year-end. The list was first issued in 1997, like you mentioned, more than 20 years ago. Prior to that, in 1995, the predecessor to the current Shariah Advisory Council of SAC, known as Islamic Instrument Study Group, actually undertook a research on the screening criteria to facilitate Shariah compliance review process. Back then, there were only 4 activity-based benchmarks being introduced for different business activities. The list is made available to the general public for free, and all investors have access to the list. Since the first issuance of the list, there were many developments taking place. The list was announced twice in 1998. In 1999, Bursa Malaysia actually launched the Kuala Lumpur Shariah Index. In year 2000, the announcement was streamlined to April and October. In 2005, due to request by issuer going for listing, Shariah Compliance Review at pre-IPO stage was also introduced. As I mentioned earlier, this is voluntary and upon application by issuers, subject to some fees. In the same year, the SC also disclosed the benchmark applied for Sharia compliance review. In 2007, the release of the list was changed to May and November, which is what we adopt currently. And Bursa Malaysia as well as FTSE introduced two Shariah indices, which is FBM Emas Shariah Index and FBM Hijrah Shariah Index. The most significant development took place in 2012 when the SC announced the revised screening methodology, incorporating financial ratio in the Sharia compliant review process. This is very important development because it created greater awareness on Sharia compliance review among listed companies, fund managers, investor, academicians, as well as the general public at large. The list based on the revised screening methodology was released in November 2013, and it featured a total of 653 Sharia compliant securities, which constituted approximately 71% of the total securities on Bursa. And it actually excluded 158 securities from the previous list in May 2013. So in May, we had 884 securities classified as Sharia compliant securities. This was before the introduction of the revised screening methodology, and the number has actually dropped to about 653 by November 2013. As at November 2020, there was 743 Sharia compliant securities, including 28 from the lead market. The market capitalization of Sharia compliant securities accounted for approximately 68% of the total market capitalization. In terms of the approach, the SC adopts a dual approach of screening, encompassing qualitative and quantitative aspect. Under the quantitative approach, there are two benchmarks, the 5% and 20% benchmarks, covering the different types of activities. If you look at the types of activities under 5% benchmark, those are activities which are clearly prohibited from Sharia perspective. Whereas if you look at the 20% benchmark, these are activities whereby there are some elements of permissibility from the Sharia perspective. Notwithstanding that, for some permissible activities, such as manufacture of corrugated cartons, bottles, can, logistic, warehousing, the SC will also look at the ultimate user or ultimate user, whether those material was supplied to cigarette manufacturer, for example, boxes, bottles to liquor manufacturer, and so forth. Our screening methodology is actually aligned to the international practices, basically all the index provider, in terms of having two benchmark. One is for activity-based benchmark, and the other one is for financial ratio benchmark. The financial ratio benchmark, we have two currently, which is the total debt over total asset, as well as cash over total asset. This will include interest-bearing debt as well as cash placed in conventional account as well as instruments. So these are the two quantitative ratios that we actually apply in terms of screening. It looks quite straightforward, and in most cases they are quite straightforward, except there may be some unique cases that we have encountered over the years. On top of that, the SC also adopt the qualitative approach. These are basically in terms of public perception or image. The SC will look from this perspective as well as maslahah or public interest. For your information, this approach is rarely been used by the SAC. Most of the time, we actually review the company based on quantitative aspect. In the future, I think as we have heard Encik Azhar earlier, I think in terms of how SRI, ESG has become more important and more mainstream, I think we will also look at how we can actually incorporate the element of SRI and ESG within the Sharia compliant securities as well. I think we are currently looking at several options, and I think we are finalizing those options as well. I guess I stop here for the moment. Perhaps we can take a question later on. Thank you very much.
All right, thank you to Encik Izzat. for sharing with us the dual approach methodology by the SSC in determining the Sharia compliance status of securities. So let me go to our second panelist. We are very fortunate to have Prof. Ashraf as one of our panel today. He's been with the SC as a member of the SAC for 8 years. Roughly, if we count 2 lists per year, there is 16 lists had been approved throughout his tenure. So Prof, if based on your experience being a member of the SSC of the SC for almost 8 years, what are your thoughts on the Sharia screening process in terms of the deliberation and the biannual approval of the list by the SSC of SC? And also, would the SSC of SC open for internationalization sorry, of the SSC of the SC's Sharia screening methodology? For example, maybe to be used for other exchanges or funds to obtain Sharia compliant status. So over to you, Prof.
Okay, Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alamin. Wassalatu wassalamu ala asyrafil anbiya wal mursalin wa ala alihi wasahbihi ajma'in. Assalamualaikum warahmatullahi wabarakatuh. Encik Arham, Encik Nur Aizat, Encik Azhar, Tan Sri, Datuk Sri, Datuk-Datuk, members of C-suites, I think the management of PLCs and all that attend our session today. Alhamdulillah, I think first and foremost, I would like to thank Bursa for initiating this session. It is a dialogue session, so I'm not going to speak too much, and we will open doors for question and answers. And I can see from the chat room there are some questions coming in already. So before we go and discuss about those questions, I think I do not have any slide to present, but asked by Mr. Chairman, I think what I would like to share with members of audience, mainly on my experiences sitting in the Shariah Advisory Council of Securities Commission for 8 or more years now. I think number one, I think I have 2 or 3 to be highlighted. Number one, I think this is in addition to what mentioned by Encik Azhar. Being a Sharia compliant company or counter will bring a lot of advantages. Encik Azhar mentioned about those advantages in his slide. I would like to add from my own experience. I'm advising in the early days of EPF Islamic, for example, when they want to allocate quite a huge amount of fund to be Sharia compliant. We all know that there is a EPF Islamic about 100 billion allocated. One of their challenges is to find where to invest this money. Yeah, so that is EPF Islamic alone. I'm also now sitting in Tabung Haji boards of directors, and this is another headache for us also. We only mandated to invest in Sharia compliant companies. If you are not in the list, even though we have money, we cannot go and invest. And it is a headache for us to find and to invest this huge amount of money. Yeah, and you can see the co-op also operating on its Sharia compliant, and also there are a lot of Sharia compliant trust fund, public mutual, so on and so forth. So I think all those, if you combine the asset that they have, the liquidity that they have, it is quite a lot. And therefore, being a Sharia compliant company is an advantage to you. Yeah, and this is in addition to the retail investors. We cannot look at our retail investors with our small eyes, because it has been proven during the crisis or during the monetarium last year, yeah, how they came into the market in big waves. And they also have, even though they are small in numbers, but they are many. Their investment might be small, but they are many in numbers, and that bring, impact to the market as well. So, and many of them, they are very much inclined to invest in Sharia compliant. stocks. So if you are not, then you miss the boat. Yeah, because being a Sharia compliant counter, you can attract normal investors, and you can attract also institutional and retail investors that has interest in Sharia compliant stock only. So by being a Sharia compliant counter, you are open to everybody. So why you stop and close your door for some segment of investors? Yeah, so I think this is point number one that I would like to highlight. By having a larger pool of investors, the liquidity will be much higher, and price also will be much stable in that sense, in one way or another. And also around my the second, that was an addition to what has been raised by Encik Azhar in his opening remark. And number two, point number two that I would like to highlight, it has been highlighted also by Encik Azhar that more than 77% of our public listed companies are in the list of Sharia compliant. They are Sharia compliant companies. And 77% represents 738. I'm looking at his numbers just now. 738 out of 976 counters. Okay, coming back to my experience in the SAC of AC, I think the secretariat, they do the screening and they present to us, I mean, the outcome of the screening. Almost every month, we are looking at the screening exercise conducted by the secretariat of the council. Of course, the announcement will be done only twice a year, but at the back of the process, it is done continuously. And therefore, we discuss in all our meeting, we have our monthly meeting, if not two, for a monthly meeting. And one of the permanent agenda in the meeting is to discuss about the screening. And you can see from my experience, I mean, there are companies who are remain as Sharia compliant companies. There are companies who remain as Sharia non-compliant companies because of their activities. For example, liquor companies, for example, they cannot, for whatever reason, because of the nature of the business, they cannot come into being a Sharia compliant companies. So we have those two types consistently in the list and consistently out of the list. But there are quite a number every month, year in and year out. There are some companies in and some companies out. At average, for example, 5 companies becoming Sharia compliant. Last year, it was not Sharia compliant. Now, this year, for example, becoming a Sharia compliant, and vice versa. There are some companies last year was not in the list, and this year was in the list, and this year out of the list. So you can see that. And sometimes it is a bit disappointing, sad from my perspective personally. When you look at the numbers as mentioned by Encik Aizat, we have, for example, the financial ratio benchmark. Yeah, financial ratio benchmark, where you cannot exceed, if you raise fund, you cannot exceed 33% of raising fund through Sharia non-compliant kind of fundraising. If you are issuing bond, it should not be bond. It should be, the bond should not be more than 33%. If you conventional bond, if you raise a preference share, your preference share is not Sharia compliant, then it will go to the list of 33%. So when you look at that, sometimes some companies, they are becoming Sharia compliant because of the additional of 0.5%. You were in the list last time. Now, because of your asset becoming lower, for example, and therefore, because it is over an asset, the ratio now becoming 33.05%, and you are out of the list suddenly. And it is the same with the cash that you have, because you place your cash in Shariah non-compliant account, then suddenly it becomes 33 or 34 or 35%, then you are out of the list. So I think it is quite sad, because for me, this can be controlled easily if you are aware about what is happening in your company. If the chief financial officer, for example, have a look at what is happening in your company, because we are living in Malaysia where all our banks are offering Sharia compliant instrument. It is as easy as that. You do not need to change your bank. You are with Bank ABC, you just maintain with Bank ABC, but you raise your fund, ask Bank ABC to raise your fund through Sharia compliant instrument, or you place your cash in Sharia compliant account of the same bank. So it is as easy as that to maintain you as a Sharia compliant counter and to get all the advantages that we are talking today. Yeah, that is my point number 2. Meaning that you need to put your concern a bit, not coming in and coming out because of only the chance, by chance, by accident, for example. Okay, number 3, we are based our screening on your audited financial report. So it is very rare, Isaac can correct me if I'm wrong, it is very rare for us to go beyond that. So this is very important. Whatever adjustment that you need to do in your financial year. And you need to be aware about what is happening in your company, so that you will maintain a Sharia compliant company. Number 4, when we talk about Sharia compliant, it is not only for Muslim. Yeah, as mentioned by Encik Azhar in his opening remark, it is for all. And we have a meeting point, because Sharia compliant criteria very much in line with, for example, the SDG by the United Nations. If you look at the SDG, some of the excluded sectors by the SDG are nuclear power generation, weapons, alcohol, gambling, adult entertainment, so on and so forth. And this is also the negative list in our Sharia compliant. So if you are not a Muslim, we have our meeting point, because this criteria is a universal criteria. Yeah, so we want to protect our earth, our universe. So subscribing to be a Sharia compliant counter, even though for non-Muslim, we are promoting the same values actually at the end of the day. May I also finally, Encik Arham, touch a bit about REIT. Mentioned in Encik Azhar's presentation, REIT is referring to Real Estate Investment Trust. We have a long way to go. There are a number of Sharia compliant REIT, and we have quite a number also of conventional REIT. And in the SAC of AC, I would like to highlight that we are very, very dynamic in our rulings. Yeah, for conventional REIT who want to convert into Islamic REIT, because at the end of the day, what make them different is that Islamic REIT cannot have activities which is Sharia non-compliant more than 5%. Yeah, so you cannot have a tenant offering gambling, for example, in your premise. So when you calculate the total income of your REIT, 5%, it shouldn't be 5% Sharia non-compliant activities. But for those who want to convert, you are now conventional REIT, you want to convert, we are very flexible. You can start with 40%, for example, and over years you need to go down to 20, then you need to finally go down to 5. If I'm not mistaken, this will be all together, the exercise will be done over maybe 10-15 years. So we are very reasonable in that sense. We know that it is not easy, but since you have a good intention to convert into conventional, this is the road that you need to take. And finally, after 10-15 years, you will become a Sharia compliant REIT, for example. So I think these are some. My point is that Sharia is very dynamic. Sharia is quite reasonable, flexible in nature. So being Shariah counter brings a lot of advantages to the companies. So I think these are some points that I would like to highlight. Thank you very much, Arham.
Thank you, Prof. Just a follow-up question, Prof. In terms of based on your experience, whether SAC is open for the Sharia screening methodologies to be adopted by foreign exchanges or foreign fund to obtain Sharia compliant status?
I think as mentioned, thank you, Arham. As mentioned by Encik Nur Aizat, what we have today is following the international standard already. Yeah, so we are welcome for anybody to follow our standard. Only that the difference, for example, those who knows IOFI, the Sharia standard setting bodies based in Bahrain, the only, for example, difference between us and them, we have a bit relaxed in terms of financial ratio, where we are at 33%, they are at 30%, for example. Yeah, but for the non-Sharia compliant activities, we agree with them on 5%, and we are a bit relaxed for some kind of industry. We have another benchmark which is 20%. This is like brokers, yeah, brokers, because they have a higher benchmark, because selling and buying of shares, they are not selling and buying shares themselves. They just facilitate, and they get fees from their clients who are selling, who are doing the trading, in a nutshell. So the benchmark is a bit higher. So I think we have our justification why we have that those two ratio. But at the end of the day, I think generally we are in line with international standards, and we are open. I mean, for anybody to adopt our standard. Maybe Cik Aizat want to add anything?
Yeah, okay. I guess our mandate here in Malaysia is to actually do on the companies listed in Malaysia. Therefore, I mean, if we have requests from companies listed overseas to actually do it, I mean, it's not within our mandate. I think we also have to look from the regulatory aspect as well. I mean, of course, Malaysia is one of the leading hub for the Islamic finance and Islamic capital market. I think when we first started, we were the first regulator to actually undertake the Sharia compliance review. If you look at other, other countries or internationally, this is basically undertaken by the index provider, and for you to actually have access to that list, you have to actually subscribe. That's why I mentioned earlier, this is one of the first, developmental initiative for SC to actually develop the Islamic capital market segment. You undertake the Sharia compliant list, you provide the list of those companies which are classified Sharia compliant, and investor can actually have access to that list. They don't even have to subscribe, they don't even have to pay for that list. On top of that, the company also doesn't have to pay anything. So it's purely from the developmental perspective. And I must say, this process has actually acted as a catalyst for the growth of the Islamic capital market in Malaysia. With this list, you can actually develop product like Prof. Ashraf mentioned in terms of Islamic fund. You can actually develop various Islamic funds based on that list. And you also can, when you have this list, you talk about investing in Sharia compliant, then companies also talk about raising financing from the Sharia perspective as well in a Sharia compliant manner. So that actually led to the growth of the sukuk market as well. So you see, in terms of the multiplier impact of the Sharia screening methodology, Sharia compliance review, it has led to the growth of the Islamic fund segment in Malaysia. And today, Malaysia is recognized as the biggest, as a country where we have the biggest number of Islamic funds. In terms of the sukuk as well, we are the leading in terms of sukuk issuance as well as the sukuk outstanding worldwide. On top of that, we also have many other products, as Encik Azhar mentioned earlier. So this, in a way, is a catalyst for the development of the Islamic capital market in Malaysia, and a lot of countries actually look at Malaysia in terms of how we have actually developed the Islamic finance in general, in terms of putting the regulatory framework, in terms of putting in the various tax incentive to incentivize issuer, investor, as well as intermediaries. In terms of having a proper Sharia governance framework, as well as in terms of having the various intermediaries in terms of facilitating the issuance process, be it funds, be it sukuk and other product as well.
All right, thank you to both panels, Prof. Ashraf and also Encik Izzat. So now we proceed to our second session, or second round, where we'll have questions from the floor. So we already have some questions in the Q&A box. And also I would like to highlight that if any participants want to ask their question directly, you can raise your hand by clicking the hand button in your Zoom. And basically our site will let you unmute yourself and you can ask the question directly. So maybe first I will go to the questions that had been asked by some of the participants. So the first one will be who are our nearest competitors in the Shariah market in the region? What is Bursa's strategy to mitigate this situation? And also what are the typical perceptions on Shariah compliance landscape, and what are Bursa's and the regulators' actions to manage these situations? So I think I let this question to be answered by Prof. Ashraf, and later if Encik Izzat wants to add in.
Thank you, Tan Sri Ahmad Kamaruzaman for the question. And since Encik Azhar is still with us, I think I don't mind if Encik Azhar can chip in and join. Of course, my answer is not representing Bursa, of course, in this kind of question. This is my personal opinion. Our nearest competitors, I think, will be Indonesia at the moment, if we are talking about the region. Yeah, but as mentioned by Encik Azhar, our market share, Islamic finance market share, you add banking sectors, you add takaful sectors, you add all the capital market, Shariah compliant capital market, we are at 2% of the overall cake in the world. So we are very, very small. So for me, I'm not looking to Indonesia as our competitors. We need to complement each other. So I would like to suggest, for example, cross-selling kind of agreement between Bursa Malaysia and the exchange house in Indonesia, for example, so that any Shariah compliant company listed in Indonesia can be subscribed by investors from Malaysia, and vice versa, for example. So if we look at this from my point of view, which we are not competing each other, but we need to complement and we need to grow our percentage, not only at 2%, but to become bigger and bigger. Then we can chart the landscape of the financial market. Otherwise, at 1 or 2%, who will hear your voice? Your voice will not be heard if you are at 1 or 2%. So we need to complement each other until the Shariah compliant instrument and the ESG instrument for that manner will become the mainstream in the financial market of the world. So therefore, I think a lot of coordination need to be made, a lot of arrangement need to be made among the players. We may start with our region in Southeast Asia. So this is my general view about the question raised by Tan Sri.
All right, thank you, Prof, for the answer. Next questions, I think I will because all of these questions are related to the methodologies. So I think these questions will be Encik Izzat can answer this. There are a few questions that are related, so I'll just ask them all. The first one will be on how do we know if the 5% is on turnover or profit before tax? So that will be the first question. The second one, for cash that is placed in conventional accounts, does this mean that this excludes fund placement in retail or wholesale funds? And then another question, if a listed company has significant activities overseas and Shariah borrowing is not widespread there, So will SC accept this as a reason to not meet the 33% threshold for borrowing or cash placement? So I think Mr. Izzat, if you may answer this.
Okay, thank you very much, Arham, and thank you very much for the question. I think it's good to actually have questions so we are able to actually provide clarification. Like Prof. Ashraf mentioned earlier, you know, a lot of companies, sometimes they are aware, but because of the lack of monitoring, so-called, you know, sometimes they actually, you know, miss that opportunity as well. We have come across cases whereby companies, you know, they are aware, but because there is a change in CFO, the change in staff at the finance department, so the new staff are not aware of this methodology and everything. So sometimes there is an oversight on their part as well. In terms of the 5%, I think the 5% and 20%, we computed on both aspects, on the turnover as well as the PBT. So if for example, either one actually breaches the benchmark, then it will be classified as Shariah non-compliant. The second one, whether cash is defined as whether this excludes fund placement in retail. I think when we talk about cash and cash equivalent. If the fund is easily convertible into cash, then we will take that into account as well. In terms of significant operations overseas, I think we have come across quite a few companies as well. I mean, you know, if there is no availability of Islamic financing, doesn't mean the SEC will automatically allow that. You know, because at the end of the day, the SEC will also look at your local borrowings. Because if, for example, your local borrowing is substantially still in conventional, that's a bit hard for the SEC to actually take that into consideration as well. You cannot just give excuse that, oh, my borrowings overseas, there's no availability of Islamic finance, therefore I cannot actually take Islamic financing. But in Malaysia itself, where you have so many options, you are still sticking to the conventional borrowing. So at the end of the day, we will still take into account. We will notify you if you actually breach the benchmark, and for you to actually provide justification for the SEC to actually reconsider. I want to highlight that from company, for example, if currently Shariah compliant, if we do the review and we find that you have actually breached one of the ratios, we will actually write to actually notify you. So you are well aware before the list is actually released either in May or November as well.
Right. Thank you, Cik Izzat. One follow-up question. Shariah compliant screening methodology is referred if the company involves in more than one non-Shariah business activities. The below 5% criteria is assessed per business activity or collectively assessed by the total business activities?
Collectively. So if you have you know, a few business activity, we'll actually add up and see whether they actually you know, below or above the 5% or 20% benchmark.
All right. Okay. We have another question. I think this one Prof. Ashraf can answer this. Regarding the screening on logistic companies, what would be the SC's approach in determining the income received from clients which conduct Shariah non-compliant activities, where the logistic activities offered to the said clients would usually on a short-term basis? So how does the Shariah members look at this matter? Prof.
Izzat, you want to answer this?
Okay. Prof. Ashraf mentioned earlier, I think when we undertake the review, we'll actually look at your audited account. So we will take that. So if you actually put that as part of your turnover for the year or part of your PBT, then we will definitely would take that into account. That's why when we undertake the review, we will actually look at your audited financial statement. We will analyze the financial statement. And if for example, your operation is quite straightforward, the activities are permissible activities, for example, you know, then probably we wouldn't ask any further queries. But if we see that you also undertake some non-compliant businesses, then we will actually write to you and ask you to actually provide a breakdown of the income that you receive from such activities as well. This applies to the cash placement as well as to borrowing as well. We will actually ask breakdown in terms of how much is placed in conventional account and instrument and how much is placed in Islamic account instrument, as well as those how much is conventional borrowing and how much is through Islamic financing as well. So as long as you, whether it's short term or long term, as long as it's captured in your audited financial statement and it forms part of your income and your profit, we will actually take that into consideration as part of the computation.
Maybe I would like to add to be more practical. For example, as a logistic company, you have your agreement with, the ships, or a lot of companies. Sometimes it is not. You do not have choice to pick and choose. Yeah, when you have the general agreement with the companies, and whatever they come, whatever come to the shore, then you need to process in terms of logistic, for example. So this is one type of agreement that you have, where you mainly the goods that are transferred or that are couriered, they are Sharia compliant, but you cannot pick and choose. Number two, you have a special arrangement with forwarding companies that are clearly involved in Sharia non-compliant activities. For example, liquor companies, you are a forwarding agent or logistic agent for a liquor company. So I think we can look at the details as mentioned by Encik Aizat, and we are also in forming our view, we are quite reasonable and practical in that sense. So if it is, purely an agreement with Sharia non-compliant forwarding companies or company itself, then it might come to be calculated against in your threshold, the 5% or 20% respectively. So I think that is my general view on that.
Thank you, Prof. Ashraf and also Cik Aizat. I'm sorry, Cik Aizat, I think most of the question is related to the methodologies. So I think we have another two questions. So the first one will be, if non-Sharia borrowing offshore backed by similar amount of FD onshore, can this borrowing be excluded from the computation of the 33% benchmark? So that will be the first question. The second question is for food and beverage related companies, how does the SC look into the business activities? Is it compulsory to have halal certification from JAKIM? Encik Aizat.
Okay, thank you. I think I'm trying to understand the question relating to non-Islamic borrowing backed by FD. So I guess the question is about if there is a conventional borrowing offshore and there's also a similar amount of FD here in Malaysia, whether this can actually be excluded in terms of offsetting. The answer is we will look at the component individually. In terms of borrowing, we'll look at borrowing individually. We'll take into account all borrowings, conventional borrowings, whether onshore or offshore. Similarly, in terms of cash placement also, we will look at that individually. There is no such concept of offsetting, so to speak, between conventional borrowing as well as placement. So if you, for example, you have foreign borrowing and you have local cash placement that can be offset, I think it doesn't quite apply that way in terms of the methodology. In terms of the question and food and beverages, yes, we require them to have the halal certification from JAKIM or other bodies recognized by JAKIM as well. So if, for example, your business is in Malaysia, then probably most of the food and beverages would be certified by JAKIM. And if you actually import, then there would be some sort of certification from other bodies recognized by JAKIM. You can go to the JAKIM's website, and there are a list of bodies also recognized, halal certification bodies recognized by JAKIM itself. So we will actually, inquire in terms of the halal certification as well. So that is part of the process as well. But I must stress that when we undertake Sharia compliant review, we accord the Sharia compliant status. We only accord that on the securities. That doesn't mean we actually certify that the products are halal or non-halal as well, because I think there have been a lot of some confusion in the past, whereby the companies actually manufactured halal product, halal certification, but because they breach certain ratios, they will reclassify as Shariah non-compliant. So that was confusion among the public, among the shareholders of the company as well, in terms of the halal status of the product as well. So as far as we're concerned, we only give certification in terms of Shariah compliant from investment perspective, not in terms of products manufactured by the companies.
Thank you, Encik Izzat, for the clarification. We have another question, and I think this one is an important one. What is the process and how long does it take for a company that has been dropped from the Shariah compliant list to be listed as Shariah compliant company again?
I guess it depends on how long the company actually takes to actually regularize its position. For example, it could be dropped because it breaches the business activity ratio. Then it has to look at that business activity ratio. I guess for business activity is kind of tricky for the company as well, because that is something that is a commercial decision that they decide to actually venture into that particular business. But if they have mixed activity between Shariah permissible and Shariah non-permissible, that's something that if they want to control it, they may want to actually control it. If not, it may take a long time for them to actually get back into the list. We have had some company in the past whereby they were excluded because of the Shariah non-compliant businesses, but they actually wanted to become compliant, and so they actually try to actually dispose of some of the non-compliant businesses as well. If the company actually were excluded because of the financial ratio, then in terms of how fast can they regularize that position in terms of putting cash in Islamic account or instrument, or converting conventional borrowing into Islamic borrowing. And as mentioned by Prof. Ashraf, we will only look at the audited financial statement. So if we have reviewed, for example, based on the current financial statement, so perhaps we will only review based on the next financial year financial statement to see whether that position has actually been reversed or not.
If I may, Arham, I would like to add the last point mentioned by Encik Aizat. I mean, the rule of the thumb, we do the screening based on the audited financial report. So the rule of the thumb, you will become Shariah compliant again once your new financial audited report has been issued. I think this will be 1 year. Yeah. So if you are out due to the FYI, financial report of 2020, then you will become, if you do all the process as mentioned by Encik Aizat, you are okay in terms of your activities, you are okay in terms of your borrowing and cash, then you will report that again in your financial audited report 2021. Then once it is there, then your position will be reverted into Shariah compliant list. Yeah, so this is the rule of the thumb. Of course, in between, there are some, I'm not sure, but it is very, very rare that we are not looking at the interim report at the moment. But if the case is the justification is very, very is valid, then in interpreting the financial report, for example. We have an example in the past that some are placed under conventional because of certain interpretation, but the company can, and because of that, it breached the 33%. But the company comes and make justification that there was a mistake somewhere. Actually, because of the terms used, for example, so on and so forth. So we need to look into the details. For example, in the interpretation, but still based on the financial audited report, then we might, change our view, so on and so forth. So the rule of the thumb, the cycle will be a yearly cycle for the company because of that, basis that we are using at the moment, the audited financial report. And you are not doing that every quarterly. I mean, the companies that you are doing that yearly.
Okay, thank you, Prof. We have another question with regards to the reclassification of shares. So the the question is, will the company be given a chance to justify their status to remain in the Shariah list? If yes, how long will be the timeline given to the company to revert? Cik Izzat, if you may.
For, like I mentioned earlier, for all companies, if we undertake our screening methodology, if you are currently Shariah compliant, then you will become non-compliant. We will actually notify you. We will actually write to you and inform you that it will be excluded either in May or November. And the company are given an opportunity to actually provide justification or clarify certain points if they wish to actually do that. So there is always opportunity for companies to actually do that, like Prof. Ashraf mentioned. In terms of providing reason, in terms of providing the rationale, so there is opportunity there. We will always inform the company. It's not the case that one fine day they wake up and see they are being excluded from the list. It's not. Most of the companies are aware of the status. We will inform them.
Okay, thank you, Cik Izzat. So before I read another question, Nadira, do we have any hand raised by the participant?
Hold on. No, I don't think so.
All right. Okay, so I think we'll proceed with the written questions. So we have one attendee asking what is the example of a company that is deemed as non-Shariah compliant due to the qualitative assessment or public perception or image, and why? Prof, if you do you want to answer this?
Prof, we cannot hear you.
I'm not sure whether we can cite the name of the company, but without citing the name of the company. But it is, it is a public, in a public domain. The company is in the list and outside the list, of course. Izzat, if I may, we have an airline company in the past where the qualitative measures has been looked into, because the company serve liquor, for example. It is not, they are not selling. They are selling and serve it for free, for example. Yeah, so that was in the past. But through engagement with the company, at the end of the day, I think they impose certain guidelines. They are not serving to Muslim, they are not offering it, so and so forth. Of course, it will not come to their book because they are not selling it. So it will not come to the income of the 5% threshold. But because of that image of offering liquor to everybody, that was the classic example, if I may cite. And we have also an example of another sperm bank, for example. Yeah, and we look at whether it is only the process only for husband and wife or open to everybody. So if the guidelines of the clinics not too, not strict enough to maintain the Shariah compliant of it, even though the income from that activities are less than 5%. SAC in the past, they look at this from qualitative. Of course, if it is qualitative, it opens for argument. You may say otherwise. So it is quite subjective in nature. But you asked about some example. I'm giving you some examples. Maybe Izzat, you want to add?
Yes, just to add, I think if you're qualitative, it would be from the aspect if the company actually fulfills the quantitative. In terms of the ratios, they are well below the 5%, 20%, or the 33% benchmark. But because they are seen as promoting certain non-compliant businesses, and people remember that company for that particular image, that image will automatically come out to the public. So So then the SAC will actually apply qualitative consideration or criteria. Like I mentioned, this is rarely being used by the SAC, only in the event as mentioned by Prof. Ashraf earlier. So I think this is one thing unique about our screening methodology, because we have this qualitative aspect as opposed to other index provider, where they only look at quantitative aspect in terms of business activity as well as the financial ratio.
Okay, thank you. So we have another 5 minutes before we end our session. So I think this will be the last round of questions to Encik Aizat. There is a question on IPO. What is SC stand for pre-Shariah announcement by some of the Shariah advisors to pre-IPO? Whilst waiting for final SC Shariah status. So can investors accept the pre-Shariah status to buy the IPO? So that will be the first question. The second one is for subsidiary. If the subsidiary is not Shariah compliant, will that disqualify the parent company from being considered as Islamic compliant or Shariah compliant? And the last question will be, do you have any tips for companies to remain in the Shariah compliant list?
Okay.
Thank you.
In terms of pre-IPO, I think from our perspective, if the company doesn't have a status as yet, I think for example, newly listed company or company while waiting for the SC, it's up to the investor to actually make their own assessment. As long as there is no status yet from the SAC, then it's up to them based on their own, review their own assessment of the company itself, whether or not they want to actually subscribe for that shares or that securities. In terms of a subsidiary of a public listed company which is not Shariah compliant, I mean, at the end of the day, we look at the total turnover and total profit. So even though you have a subsidiary which undertakes Shariah non-compliant businesses, at the end of the day, we will look at the contribution of that particular businesses to the group turnover and PBT. If it's still below 5%, then the holding company will still be considered as Shariah compliant. In terms of the FMB, yes, if operates abroad, then we also will look at the certification from other bodies recognized by JAKIM, as I mentioned earlier. In terms of the tips to remain Shariah compliant, I guess you have to put in place a system whereby you can actually monitor in terms of your financial position, in terms of borrowings, as well as your cash placement, because these are the two most important things. Most companies are excluded because of either borrowings or cash placement. And the easiest one to comply is on the cash placement, but a lot of companies actually fail on that aspect. Because sometimes towards the end, you get suddenly rush of cash from customer, you collect all your debt and everything, and sometimes in the spur of the moment, you actually put in the conventional accounts, although you also have Islamic accounts. So sometimes there is oversight, or in terms of the short time period to actually transfer into Islamic account. So I guess in terms of effort to maintain Shariah compliant, I think perhaps the company may want to actually come out with a procedure or policy in terms of how you actually monitor cash placement, in terms of borrowings. Maybe you have a policy for everything has to be Shariah compliant financing if company want to actually undertake any borrowing whatsoever. In terms of investment, the only investment in Shariah compliant asset, Shariah placement of cash in Islamic bank. In terms of activities, that is a commercial decision by the company itself. If they undertake Shariah compliant businesses, whether they want to actually, scale down that businesses, or they want to actually expand into other Shariah compliant businesses as well. Like as I mentioned, and Dr. Ashraf mentioned also, in terms of value proposition of becoming Shariah compliant. I mean, there is a value proposition because you actually, your wider investor base, both Islamic and non-Islamic investor can actually invest in your securities. There are so many Islamic funds available in the country. There are 16 Islamic banks, takaful companies, fund management company, they are seeking for Shariah compliant investment. On top of that, we also have EPF with a dedicated, Shariah scheme, and Co-op as well. They also have Shariah aspect as well. So I think there are a lot of Shariah investors who are looking for Shariah mandate, Shariah compliant investment. So therefore, it's quite important for companies to actually remain Shariah compliant. So you are able to actually attract these investors. At the same time, it will also provide value to you in the future as well. Because we have come across whereby company want to become compliant because suddenly they have like strategic investor for the Middle East wanting to actually invest in their company, and they want that company to become Shariah compliant. So at that point in time, the company will actually, have to find ways to become Shariah compliant. So I think I hope companies can actually see the value proposition of becoming Shariah compliant and try to actually maintain that position as well.
Thank you, Cik Izzat. I take it that as your final remarks for this session. So I would like to thank all the participants and for all the questions. And also with that, I would like to thank both panels, Cik Izzat and Prof. Ashraf. It is always a pleasure to have a discussion with you. And also to quote Prof. Ashraf, basically Shariah is dynamic, Shariah is flexible. And also in the current market, to have a Shariah status is can be regarded as a universal criteria. And please do reach out to SC, mainly Cik Izzat, for any further questions or any further clarification that you want for your company. So with that, I think for Nadira, I pass the session to you. Thank you.
Yeah, thank you to our respected panelists, and we hope that you had enjoyed the meaningful discussion that we had today. That marks the end of Shariah Investing Dialogue 2021 with PLC Series 1. Before we end the session, I would like to also invite you to the Shariah Investing Dialogue 2021. It is themed Sustainable and Responsible Investing within the notion of Makasih Al-Shariah, and the event will focus on the importance of integration and convergence of Shariah investing and SRI. And it will provide an avenue for audience to explore full potential of investment in Shariah-compliant instruments with linkages to SRI. The Shariah Investing Dialogue 2021 Series 1 will be held on next Wednesday, 24th March 2021 at 3:30 p.m. We will share the registration link via email to you. We hope that this session has brought meaningful values to you, and we hope to see you again in our next series. With that, Assalamualaikum, stay safe and have a nice day.